Welcome to our PwC webinar on sustainability reporting for first-timers. Today we'll focus on CSRD reporting, practical examples, and then of course we'll also spend time on the Omnibus Package, which was proposed by the Commission last week. But first of all, a short presentation. So my name is Karina. I'm leading our sustainability department in PwC. I have advised companies on sustainability and provided CSRD and sustainability assurance for companies for the past more than 10 years and working with sustainability even longer than that. Looking very much forward to dive into this exciting area. But first of all, Moritz.
Yes, hi, my name is Maurits. Very glad to be here. I will talk a little bit to you in about 20 minutes about our experience at GN, where I head up sustainability, where we were a first-timer reporting.
Great. And my name is Ida, and I'm a senior manager in Karina's sustainability department, and I'm doing both the advisory and assurance and looking very much forward to dive into this today.
Excellent. So today, what we are going to do for the next hour is, first of all, to talk about the Omnibus Package. What is the sort of key content on it? We also have a webinar in a week's time, Thursday next week, where we'll dive further into it. But today we'll have an overall look at it. And then secondly, we'll also talk about best practices related to CSRD reporting. A lot of new CSRD reports have come out, a lot of experiences. We will sort of focus on some of the key highlights. After that, Moritz is going to present GN groups and your experiences related to CSRD reporting. And then after that, there will be time for questions. So please use our chat function and write questions. We will then do our best to answer questions. And if we don't have time to answer all of it today, then, as I said, we have the chance next week as well. So please just add questions as we go along. Also, shared slides will be shared after the webinar.
Yes. And maybe just to supplement a little bit, since the focus today is sustainability reporting, our focus also on the Omnibus will be the changes proposed related to the CSRD and the taxonomy. So as Karina said, we will talk more about the whole package and also the CSRD next week, but today it's the CSRD and the taxonomy that's the focus. And then maybe we can also say that with the changes that is here today, what we will really talk to you about is that first-time reporters, we hope that you will get some good inspiration from Maurits so that you get good tips from your peers. And then for those of you who are not sure, those of you who are in scope for financial year 2025, we're also hoping that today you will really get a sense of, if you wish to continue with your reporting, how you can make sure to focus on the value creation part of that. So that is our aim of today, to make sure that all of you go away with good inspiration.
Excellent. Let's jump into it, the Omnibus Package.
Yes. So as Karina said, the Commission last week published their Omnibus 1 package. Several packages were published, but the Omnibus 1 package is the one that we are focusing on. This consists of several proposals, but two of the proposals that we are focusing on are about the CSRD, CSRD, and again the taxonomy. And what you can see here on the slide is that we have two proposals. So one of the proposals is what we call the Stop the Clock proposal, and this is about postponing all companies in scope for financial year 25 and financial year 2026. So this is, and that's why you call it the Stop the Clock, because it's actually just stopping the time and postponing. So what we call wave 2 and 3 with 2 years. Yes, and then we have the content proposal. And this is the proposal where the Commission proposes the changes related to the scope, assurance, value chain, and so on. So it's to understand that you can maybe say that these two proposals reflects two phases, and that the stop the clock proposal is the one that kind of right here now are trying to postpone the sustainability reporting, and then the other one is the content with all the changes that we will talk more about. Yes. So what is in the proposals? First of all, there's a phase-in period. So as I just said, so for what we call wave one, so sustainability reporters or companies in scope for financial year 2024. So that is all of you who have already published your sustainability reports, or you are maybe just finishing up before you have to report. For you, there are no changes right now. So there's like a transitional period for you. And then what we see is that companies in scope for financial year 2025, you are being postponed with 2 years to 2027. And then the wave three, as we call it, companies in scope for financial year 2026 will be postponed to January 2028. And then what we will also focus on today is, again, the voluntary part of reporting, and that the voluntary reporting is recommended to agree that's suitable. Then what about the scope? So in the content proposal, the Commission proposes to adjust the scope so that the scope going forward will be more than 1,000 employees on average, and either a turnover exceeding 50 million euros or a balance sheet total exceeding 25 million euros. So it's important to notice the little and listed companies will then going forward be in scope if these criteria are met. So again, this is what is proposed in the content proposal. And then when we talk about the value chain, going forward, the Commission will also propose a voluntary SME standard. EFRAG right now have already made one on the table, but going forward, companies subject to the CSRD shall not obtain information from the value chain beyond what is recommended in this voluntary SME standard for the value chain partners with fewer than 1,000 employees. So again, this is a way to also look after these companies that have 1,000 employees and below. So that is a phase and period changes, scope changes, and then value chain changes. And if you have any questions to this, you of course put it in the chat, and we will talk more about that. Yes. So there's more things proposed. Sector-specific standards. The option right now to in the CSRD and to for the Commission to adopt sector-specific standards is proposed removed. So that means that there will be no sector-specific standards. For assurance, the Commission will publish what they call targeted guidelines for limited assurance statements to make sure that the guidance around this is even better and more clear. And then the possibility that is also in the regulation right now for a move towards reasonable assurance is also proposed removed. So going forward, it will be limited assurance. And then also related to what we talked about before regarding value chain, the Commission intends to issue this voluntary sustainability reporting standard that they, of course, have to propose themselves, but they will look to what is already on the table now proposed by EFRAG. And then what is also very important is that the Commission is giving a mandate to revise the ESRS via delegated act. So right now, there's not proposals as such on the table, but at least the ambition with this revision is to reduce the number of data points, to prioritize quantitative data, so the metrics over all the qualitative data points, and provide clear instructions on how to apply the materiality principle, the double materiality principle. And the Commission are saying that when the content draft is finally adopted, they actually they say themselves that they will issue these adjusted ESRS within a period of 6 months. So 6 months, the latest after they will publish the revised ESRS. So that's kind of what's on the table. The changes is not in this proposal, but at least the ambition is written, and this is what's the plan. Yes, so I think that was the changes related to the CSRD.
Yes, exactly. I can see a lot of questions is coming in, and maybe just to clarify one thing. So yes, if you were in scope for CSRD reporting for the accounting year 25, the proposal is to postpone that by 2 years. So that's why it has considerable impact to a lot of you. It's still a proposal, but since it's this stop the clock fast track proposal, it's likely that it will be adopted this year. All right, but we'll come back to answering questions. But now, with regards to the Omnibus proposal, looking into the taxonomy regulation and proposed amendments to that. What is proposed is that companies in scope for taxonomy regulation should be companies that are also in scope for CSRD. So that means the companies, you with more than 1,000 employees. Then in addition to that, as a threshold of 450 million euros is introduced, turnover is introduced. So that means that that companies with a turnover below 450 million euros, they are subject to ease requirements. The taxonomy is implemented in Danish regulation or implemented directly through delegated acts. So that's now out in public consultation. What is proposed is that the reporting templates for the taxonomy should be simplified. Also, there is a proposal of introducing a materiality threshold or the application of materiality threshold. There is an option to report partially sustainable activities. So you don't have to you can actually report if you only partially aligned with the criteria. And then also voluntary OPEX reporting and simplified do no significant harm criteria. And then thirdly, with regards to the eased reporting, so that's the requirements that is suggested for those of you who are below 450 million euros in turnover. It's suggested that you only need to report on aligned activities, so not eligible activities. That was very brief, and as Ida said initially, we'll come back to the suggestions or the proposal with regards to CSRD in our webinar next week. So right now, as I said, all of you who had been in scope for reporting, CSRD reporting for the accounting year 25 and are now no longer in scope, or it's postponed with 2 years to the financial year 27. What we would recommend you to do is to make an informed and strategic decision about your next steps, because this means that your sustainability reporting is now voluntary for the next 2 years. Many of you have already conducted DMA, you've already conducted taxonomy assessment. So and the DMA is actually a super strong foundation for working systematically, strategically with sustainability. So we definitely recommend you to take a step back, look at what you have, and consider how to apply this for the next 2 years. Then secondly, we would recommend you to assess expectations for your future reporting. So what do your stakeholders actually expect from you? What about your clients, investors, and so on? Do they have expectations to your reporting, your disclosures on different metrics and so on? And then based on that, what you have today, expectations from stakeholders, we would recommend you then to determine your future reporting approach with regards to whether it's voluntary for the next 2 years, or whether if you are below 1,000 employees, it's actually voluntary in the longer run as well. But then to decide, will you start publishing or continue publishing a voluntary sustainability report? What should be the ambition level for this? Which ROO, so impacts, risk and opportunities, are actually the key ones you need to address? Which metrics should you include? Should your voluntary reporting be based on this VSME standard that Ida mentioned before? And should it be provided with limited assurance? That's all up to you to decide now. You can actually make a strategic decision because it's voluntary for you for either 2 years or in the longer run, depending on the size of your company. And then our recommendation is then to focus on value creation. Of course, what is actually adding value to you as a company, and that's what you should be focusing on. All right, we better move forward, but that was super quickly on the Omnibus. Now, moving into key best practice highlights. Because right now we are in the situation where a lot of companies have actually published your first CSRD reporting. A lot of experiences are now collected, and it's definitely worth to look at what we have on the table. We have gained a lot of experience. Let's all ensure that you are elaborating on that. So our recommendation, as Ida also mentioned initially, is that for you as Wave 1 companies, we do this in order for you, hopefully, to get inspired for potential improvements for your 25 sustainability statements. And then for those of you who are in Wave 2, so that's companies in accounting class C large who were in scope for 25 reporting, we would recommend you to get inspired or get inspiration for your potential voluntary reporting for 2025 and onwards. So that's what we're hoping on for the next 40 minutes to inspire by that. We have supported a huge number of companies in getting prepared for CSRD reporting and also obtaining limited assurance on CSRD reporting. These are some of the highlights, what we would sort of say would actually are characterizing a good CSRD report, some of the key elements that are very relevant and that we would like to focus on now. So that is regards to the structure of the sustainability statement, how understanding how business is translating into material impacts, risk and opportunities, using ROs to describe for the common red thread, and also applying metrics. So that's what we are going to dive into now.
Yes. So the first theme is, as Karina said, a clear sustainability structure. A structure that is clear is the alpha omega for your sustainability statement, and it's where the reader gets the understanding of what you're reporting on. So first of all, the table of contents. Is it clear that you are reporting on the sections that the ESRS requires, so the general information section, the environmental section, the social section, and the governance section. And here it's important to remember that there are freedom within each area, but is it actually clear that, for example, under the social section, which of the topics are you reporting on? And then here it's also important to remember that is it clear for the reader that there are also some of these topical disclosure requirements that need to be disclosed in the general information section. So yes, be sure that you have a super clear and good structure for your sustainability statement. And then it is not a requirement, but what also really helps the reader a lot, and it's best practice, is to disclose the disclosure requirements, because then it's easier for the reader to kind of follow when you are reporting on what. So that can be in different ways. It can be in the table of content, but it can also be in the index list you might have, or also throughout the report. So again, it's not a requirement, but it's something that we see as a best practice in order to help the reader navigate your sustainability statement. And then also, lastly not least, when we're talking about a clear structure, having really clear what references you are using. Are you using or are you applying incorporation by reference? To what pages is that? And is that clearly identifiable in the report? Here, of course, are the conditions that you need to live up to, but it really should be really clear where the reader can find all the different disclosures related to the sustainability statement. And again, here, the layout also plays a role and makes the reader find these disclosures even easier. So that's the first thing, a clear sustainability statement structure. The next theme that we see as very important is, then we'll just move to the next one, is understanding the business and how it translates to material impacts, risk, and opportunities. Again, help the reader understand your company and the context of it and how it translates to these material IROs, as we call it. So again, what is your business model? What about own operations and your upstream and your downstream value chain? Here, what we see a lot, it's not a requirement in the ESRS, but here also illustrations can help a lot and really visualize your context and where then the different material impacts, risks, and opportunities are located in your value chain. And then also there's the whole part about management's role and skills and expertise. And here be aware that there are additional information required compared to what you usually write in the management review. So again, is it clear for the reader when we're talking about sustainability and material IROs, how your management is handling that? That should also be clear. The process, this is very key to the whole report. The double materiality assessment is where you decide what to report on. So again, is it clear for the reader how you have conducted that? What stakeholders have you engaged with? That is not necessarily normal stakeholders, but also when we're talking about sustainability, what stakeholders have you engaged with? What thresholds have been used? And then also, what topics have you not considered material? Remember that there are these mandatory disclosure requirements that you need to report on, so it's clear for the reader that you have also assessed some of these topics, but just not assessed them material. And then lastly, but not least, how have you determined your data points? One thing is conducting the double materiality assessment, but then how have you worked with actually then identifying what you are reporting on? And then when it comes to this theme, strategy, which elements of your strategy relate to the material IROs? Is this clear to the reader? And how do the IROs also interact with your strategy and business model? Again, here there are some additional requirements if you at least look to what you usually write in your management review, and this should be clear to the reader, so be aware that there are more things that you need to disclose here. So this is the second theme that we see as a best practice theme, where you, the more you make it clear for the reader, the easier it is to follow your report.
Yes. Thanks a lot. So moving on to the third theme of what we see as best practice areas, that is to help the reader understand or the common red thread. So that is the link from material IROs and all the way through policies, actions, and targets. Because as you know, the key element in your double materiality assessments, that is to understand what are the key impacts, risk, and opportunities. And that's what your sustainability reporting or statements should be focusing on. So that's the entire backbone of your sustainability report. It's important to spend some space in the statement to actually elaborate in order for the reader to understand what are the key impacts, risk, and opportunities, because that is what creating the red thread throughout the report. We also have a lot of discussions on aggregation of ROs because some of you have identified 100 ROs, and of course you cannot report on all of them. And it is allowed to aggregate them to some key ROs, but just that it has to be in a way where it's still possible to understand, okay, so is this risk related to which group of suppliers or what kind of materials and what kind of customers and so on. It needs to be specific in that way, also because that then enables you to determine and to scope what exactly do you need to report on, which policies, actions, targets, metrics do you need to report on in order to ensure that that is focused on what you have identified as the key impacts, risk, and opportunities. The fourth element related to best practice that we have focused on here is related to the metrics. So what we see, we have described it as the crown jewels of your report, but that is actually that is what is enabling the reader to very clearly understand your current performance, where you want to move, your targets, and so on. How are you performing? And also, according to the ESISs, if a metric is determined material, then you have to report on it. Then it's mandatory. But first of all, with regards to the scope, it's important to determine and to be very specific about your reporting boundaries. That's something we've discussed with a lot of you, because if you have operational control over some joint ventures or associates or whatever, then that should actually be included for some specific metrics as a part of your own operations. So for instance, it needs to be included as scope 1 and 2 emissions. So that's why that is important to determine, to make sure that your metrics are covering the entire company and potentially also entities where you have operational control. Secondly, there are some mandatory tables. It's not a lot, but there is the E16, which is related to scope 1, 2, and 3 emissions. And then there are also a number of tables with regards to S1. So that's metrics related to your own workforce. So make sure that you actually apply these tables. It enables external readers to easily assess your reporting and to compare across company. And then again, RROs, we cannot mention these impacts, risk, and opportunities sufficient number of times, because it's so crucial that what you are reporting needs to be reflecting your key impacts, risk, and opportunities. So consider, are your metrics that you are reporting on, are they actually covering that? Or should you actually be reporting on any entity-specific metrics? So a number of you have actually been reporting this year on company-specific metrics, which adds a considerable value for external readers in order to understand your specific company and operations. All right, that was very short. We could have talked a lot more. This is more than a years of experiences, but time is flying. So I'll give the word to you, Maurits. Take it away.
Thank you, Carina. Once again, very happy to be here. My name is Maurits. I come from a company called GN. Some of you might not have heard of GN, but you might actually be listening to this webinar using one of our products if you have a Jabra headset. If you're a gamer, you might know SteelSeries. If you have hearing loss, you might be using one of our hearing aids. We're a very old company. That sounds very sustainable, more than 155 years old. Always adjusting to new realities, and I think sustainability is also a new reality we're working on. I head up the sustainability team. In my team, we also have responsibility for ESG finance, so CSRD kind of falls under that. 6th of February was, the year is young, but was a highlight already. The highlight of the year is when we published our annual report, which was CSRD compliant. I no longer dreamt of application requirements or EFRAC templates or PwC auditors. And it was, I'm not going to lie, a lot of hard work, as I'm sure those of you who've been through the same can testify to. It also means I can now kind of reflect a little bit on how that process went, and what I will share today. You can see it here. Is 3 key lessons. I could have come up with 10 or 20 lessons, but CSRD is super complex. I'll try to keep it simple. And I think it was great to get the overview just now. And I think what I'll talk to really resonates with what you set out as well. But first, I want to start with just putting our report in a bit of context in terms of numbers. I'm sure those of you working on this or having worked on this have presented this to the board or senior management, and the question always comes up: how do we compare to the others, in the sense that we don't want to kind of stick out either way. So actually, very often the question comes down to numbers. How many pages have you used, etc. This is our table of contents. Hopefully aligns with what you recommend. And what you can see here, it's 64 pages out of a 190-page report. That is a sustainability statement. And if I'm honest, this is also behind a lot of the push for the Omnibus, because this is a lot. This is a big chunk if you also compare it to the business review, for example. And I think this is where it also makes sense that we think, okay, what actually adds value here? But we took that approach already as far as CSRD would allow us, but we still ended up with a big chunk of our report being the sustainability statement. Here are some more numbers, which also reflect the materiality of different ESRSs. In total, our report contains 480 data points spread out this way. What you can see is that as a manufacturing company that has our own manufacturing out in China, Malaysia, but also a lot of outsourced manufacturing that depends on value chains with human rights issues, etc. These issues related to climate change, but also related to resource use and everything on the social side are material to us. We actually scoped out water and biodiversity. We do cover that sort of indirectly in climate change. This is kind of middle of the park if you look at what others are reporting on, and that also gave comfort internally that we are kind of on the right track. A lot more numbers here. Maybe a few to pick out on the right, and I'll jump into the IROs a bit more in a second. We ended up with 29 IROs. You can kind of see how they were split out, more impacts than risks. When we started the process, we also had a lot more. So it was also really a process of focusing, of consolidating, of bringing IROs together and really challenging ourselves. Is this an IRO? Can we merge it, etc.? A few other numbers you see here are sort of the splits between how many pages we spend on general information, environment, and social. And then to the left also some real numbers in terms of how many words was it, how many pages, etc. Maybe one other one to pick out here is sort of the split between qualitative and quantitative. So you see here in the middle that obviously the current CSRD makes us report a lot of qualitative stuff, and that also then contains about half the total data points in there. And maybe for those of you working or having limited assurance or thinking about doing that, we had 135 data requests from the lovely people at PwC. But I must say that that was a very good process all in all to kind of work on this together for the first time. So that's to create a little bit of context. The three lessons I want to give to you, and I want to maybe give a bit of a disclaimer here because I'm aware a lot of you in wave 2 or wave 3 are currently in a lot of uncertainty. What I'm presenting here is kind of for those of you who are either in wave 1 or in wave 2, and I kind of want to really take this seriously. And if you take the strategic decision to do so, I hope this will still add value, even though you might not be having to follow this to the letter next year or the year after. You can see the lessons here. IROs are the red thread, very much in line with what Karina and Ida just talked about. Kind of the first phase, obviously, of your process related to double materiality, and getting the IROs right and then using them throughout the report is super important. Then I want to talk a little bit about how we organized around CSRD. I think it's super crucial that you spend time on working this out. And then finally, I want to stress the point that was also made, see also Omnibus, but generally perceive CSRD as something where you have the opportunity to highlight what brings value. And I have a few examples of what I think brings value and what didn't bring value. So if we start with the IROs, what I've tried to do here is just put in, sort of make clear what it actually, what you're also talking to, how that actually worked. And if I'm honest, it took us a while to get here. CSRD, if you start reading the ESRSs and you start reading CSRD, it's actually very difficult to see the red thread in CSRD. And the risk is that you kind of go data point by data point and you draft something per data point and you lose track. And we did that a bit. Once we sort of got it into our heads that everything begins and ends with the IROs, it actually became easier to draft the report. What you see here is kind of a concrete example of an impact we defined around resource inflows. Obviously, we're a manufacturing company. We use a lot of plastic, metals, minerals, etc. in our products. And that's reflected in an IRO related to the use of virgin and non-renewable materials. At the top is literally how we describe that in the IRO list, and then you can also see how we then put some more substance behind that in the general disclosure chapter. And every time we said, also when we went into the topical standard, in relation to this IRO, we're doing X, Y, Z. And I think it's a good way to think about it. Every time when you're writing the report, always think, what is what I'm writing? Can I link it directly to one of our IROs? And if you keep challenging yourself to do that, I think it makes the process a lot easier. You then see also on the right the metrics that relate to this. So that was lesson 1. IROs are the red thread, and spend time on really defining them, getting them right. Everything else flows from there. Second lesson, build a strong project governance. How you organize around CSRD is, I think, crucial in making it a success. And we also spent quite a bit of time planning for this and then getting this right. This is how we are organized internally around CSRD. First of all, bring your board along. I think it's fair to say that whoever drafted the SRSs maybe didn't consider, is this understandable for the average board member who is not an ESG expert? So there's a lot of translation to be done. And we spent quite a lot of time literally educating, in our case, the audit committee, which is responsible for this, on what is actually, what does this mean in practice, and make it super concrete. And we brought them along in the double materiality process, and we kind of gave them quarterly updates on everything we're doing. Then the absolute vital part for us was the steerco. The steerco was a monthly meeting of the people you see here, so a lot of senior people, the CFO, who kind of chaired it, but also the Chief Operations Officer, who's obviously responsible for a lot of IROs related to our operations, the Chief People Officer related to a lot of HR topics, Group Finance, the person responsible for that, to make sure that the audit process, aligned well with the financial audit process, and communications, who in our case are responsible for ultimately producing the report. Investor relations, also, for those of you who are listed, super important. They need to kind of keep bringing in the perspective of, does this make sense? What are investors going to say? What we did in the steerco was 2 things, kind of update them on the general process. How many data points have we covered? Where are we? How is it going with the auditors, etc.? But more importantly, sort of strategic questions around how are we going to approach this data point. So, for example, we had a discussion around adequate wage, which is a mandatory reporting requirement. You can report, it really depends how the company looks at adequate wage, what that means in terms of how you have to report on it. Do we consider minimum wage to be adequate wage? Do we want to go above that? That discussion needs to take place at that level, because that obviously has major implications financially, potentially. It has implications on our operations, on our people setup. So that these types of questions we brought up, and we spent a lot of time really getting the guidance so that we can then could then report on it. Below that was the core team. And a lot of people also asked me, how many people do you need for this, etc.? What worked really well for us was that we had a project manager who was solely responsible for the process. And this doesn't necessarily even need to be an ESG expert, but someone who can just take the complexity and turn it into a simple process. We have one ESG controller who's kind of responsible for a lot of the controlling around this, obviously, and then we had some subject matter experts in our team who provided the input. Then below that, and that's also the subject matter expert, we obviously work with a lot of people in the business to make this real. This worked really well for us, but it took us a while to get here as well. On to the last lesson. Focus on what brings value. Again, echoing what has been said, and I think the Omnibus is also an opportunity here to really do this. This is kind of for my report. So this is how we try to already bring focus during double materiality. We scoped out around 50% of subtopics. In the beginning, water was material, biodiversity was material. So we even looked at affected communities. We did, throughout this process, also realize less is more, focus on what really matters. So you don't end up spending a lot of your time, trying to report on data points where, in all truth, the real value is hard to determine. That's one way. So keep that in mind. Metrics is where the magic happens. I agree with that. Here are some examples of, I think, data points that we put in our report that really help us understand our impact on the environment and also help us understand how we should drive improvements. And I want to maybe focus on the graphs on the right here. So these are mandatory metrics for standard E5 related to ultimately what types of materials do you use, or how much material do you use, and how much of that is sustainable. And the graph on the bottom right made us calculate this, the fact that we had to report this, and now we have a strong baseline which shows around 20% of our materials either sustainably sourced bio-based material or recycled content. So if we now we want to start working on our circularity strategy, this is a super helpful metric to understand. And putting this in front of our senior leadership makes them also understand, at least from a resource inflows perspective, how far we are. So these types of metrics, we spend a lot of time on, but they really bring value to the reader and also internally to our strategy. But there are also, I'm not going to lie, a lot of data points that just don't add a lot of value. I have here on the top left, super minimal taxonomy eligible activities. I'm happy a threshold is being brought in. We spend a lot of time, calculating. You see the percentages here. That doesn't say anything about the real, sustainability of our company in any way. Another example, you have to, and I think Ida touched on this. You have to report what you don't have, and we spend a lot of time kind of describing we do not have a target, and you have to say why you don't have a target. But and yeah, I think it's kind of obvious if you read the report we don't have a target, and there I also don't necessarily see a lot of value. Finally, a lot of repetition in ESRS. So it will say, I have an example here, sort of a summarizing data point, then an explaining data point, and then a detailed data point, which all cover the same thing. And we spend a lot of time trying to decipher this. You can almost merge them and just look at them as one data point. And then I hope it brings value. Finally, looking back, I wish someone would have told me at the start. Again, if you just start by reading ESRS, it's really risky that the risk is big that you get lost. So whenever you're writing something, think, does this provide valuable information for the reader, or am I just purely writing this to comply? If the latter, especially now with the new the Omnibus, leave it out. Approach double materiality from a less is more perspective. Those of you who are in this or about to do this, I think it's also, if you purely look at it from a sustainability perspective, it does make more sense to really focus on a few things and do those well. And finally, just on a more operational level, add data tags in the draft text to keep track of progress. So this sentence covers this data point, put that in the text, and that way you can kind of make sure you don't miss anything. Thank you. For those of you who haven't read our annual report, I can almost not imagine, but if you haven't, the link is here. Have a look at our website. My email address is also here. I think it's really helpful to speak to peers around this and to share experiences, to have, almost therapy-like sessions occasionally. Please reach out to me if you want to do that. I'm really interested to hear from all of you as well, so we can kind of take the lessons together and not reinvent the wheel. Thank you.
Thank you so much, Moritz. I think this was super interesting, and also good to hear that we have kind of the same experiences from different sides. Thinking about that a year ago, none of us knew how a sustainability statement looked like, and you actually managed to do it in a way that enables you to communicate to external stakeholders. I think that's very strong. So well done. We have received a number of questions, and some of them are for you, Moritz. So I'll just start off with one of them, which is focusing on metrics, asking which data or software system have you applied to collect, or how have you done that, collecting data?
Some of you might know of this thing called Microsoft Excel. The reality of it is a lot of it goes through Excel. We have specialist system for carbon emissions through Cority. And for own workforce topics, we use Workday. Kind of that's the system we had already. But it still all comes together in Excel. We're currently this year kind of in the process of working out what consolidation tool we might use. Where we're looking at different options, also considering what we're implementing now for the finance organization. I would like to just say I'm sure lots of you get daily emails from people saying this is the solution that will solve all your reporting problems. The tool is only as good as the data processes underneath. It can help you consolidate and bring things together, but if you don't have a sort of structure and governance set up underneath where people have clear responsibility in terms of providing the input data, it's not going to help you. So I would say don't be tempted to think if only we have a system, we'll be okay, but rather focus on, okay, how do we build that data infrastructure? And then I think a lot of these systems kind of more or less do the same thing. Pick one that kind of fits your needs.
Yes,
yeah.
I would very much agree on that. That's also our experience from our side, and actually what we see works really well in many companies is to develop underlying ESG data accounting manuals. So in detail describing how are you defining each different metric, who is collecting, what are the controls and all that. Of course, you have the accounting policies that is published as a mandatory part in your sustainability statement. But in addition to that, also to have some internal descriptions on how these data should be collected. Is that something you have
yes.
as well, or what are your experiences in that?
Yes, absolutely. And that's also something that CSRD forced us to do. If I look back to the years before, it was often I emailed someone and then got an email back and I kind of edit those numbers up and then saved it somewhere. What this really forced us to do, and that's also why we got, a project manager, an ESG controller who kind of were responsible for a lot of this, is to kind of back it up and document it and have these accounting policies and governance documents showing clearly that data point needs to come from this person at that frequency, and these are the controls. I'm not saying we're there yet at all, but we've made a lot of progress also thanks to having to report this.
Yeah.
But I completely agree.
Yeah, great. And that's actually what is creating solid data that you could then apply when steering your company, understanding whether you're meeting your targets and so on, because so it's quite a fundamental element.
Yes.
What about another question that some of you have asked about? That is actually it's about going forward, whether it will be a requirement to integrate a sustainability statement in the annual report. And I mean, for those of you who are reporting this year for the 2024, so that's listed companies with more than 500 employees. Current CSRD is still in force. So that means, yes, it's the same requirements. You will be required to include sustainability statement in your annual report. But then, as we talked about, for those of you where CSRD reporting is now postponed with 2 years, and you've got this period of 2 years if you're more than 1,000 employees, and in the longer run, if you're less than 1,000 employees, then it's up to you to decide whether you would like to integrate it in the report or whether you want to keep it as a standalone report. But perhaps over to you, Maurits. What are your experiences with regards to integrating the sustainability statement in the annual report? Is it adding value? How do you see it?
We integrated already 3 years ago. The reason we did that was that we saw a lot of repetition between the financial annual report and the sustainability report, and that just didn't make sense. We are quite a sort of pragmatic company, and we don't want to overcomplicate things. And I think what we saw was a lot of these areas were kind of in between, like related to own workforce, for example. And we just thought it just makes more sense to put it all together and have it in one place. And I still believe in that. So. And obviously now with CSRD, it makes even more sense, I think, because you also need to reference. It needs to all be a red thread. So often you find yourself referencing in the sustainability statement to the management report, etc. So I would say put it all together. It also demonstrates that you take sustainability seriously. And I think maybe the value of having the sustainability statement is. One of the arguments for having a separate report is obviously that you can just ship that off to show your sustainability credentials. Now you can kind of send the sustainability statement.
Yeah.
Maybe final thing on that. I wouldn't consider the sustainability statement as a marketing tool or anything that can tell the story more from a commercial perspective. So if you're like us and you have brands and products, tell the story through the brands and through marketing channels, but try not to think of the sustainability statement as a tool to tell that story towards your customers, because CSRD is a bit too clunky for that, I would say.
Yeah, I very much agree on that, and that's actually something one that we could have highlighted as a key learning as well. That is, we've talked a lot about now the impacts, risk, and opportunities, and how that's creating this red thread. But what we also see is that it's creating or forcing every one of us to make a more balanced report, because now you have to focus on the risks as well. So it's really, in that sense, changing from perhaps previously being more sort of a marketing document to now actually where you are disclosing what are the sort of key risks, the impacts, and how are you working with this. So I agree. And then what I also see, or what we see in a lot of companies, is that by integrating the sustainability statement in the annual report, it all of a sudden, I mean, it brings it up to the board of directors, the audit committees. It gets another focus, and that actually has quite sort of significant sort of impact on the company, as I see it from outside.
And there you need to also do expectation management. So part of your story to the board or senior management should also be, this is not what typically a sustainability report might have been, as you say. And you need to warn them a little bit. There's a lot coming. It's going to be a lot of pages. It might be quite boring, but this is the reality of taking ESG reporting to a more serious level. The financial statement is also boring, and the reason for that is that it needs to be comparable. It needs to use the same standards, etc. And this is ultimately a reflection of the maturity of ESG, I would say.
Yeah, I agree. It's quite strong that now with sustainability statements, you are able to actually look into a lot of different companies reporting and to compare and to easily find the information. So that's at least some of the strong sides about sustainability or CSRD reporting. All right, we have also received a lot of questions with regards to related to the Omnibus, and one of them is with regards to the timing. When can we expect this to be adopted and so on? I don't know, Ida, can you elaborate a bit on that?
Yes, so we can talk a bit about the timing with a big disclaimer that, of course, it's really difficult to say. But I think when we look at the two proposals, so the stop the clock proposal, already there in the proposal, the timeline is that member states should actually be have everything implemented by the end of this year, so by the 31st of December 2025. So that's kind of the timing for that, and that's again to kind of stop the clock now and make sure that some of you who are in wave 2, so in scope for the 2025, that you do not start all of these things and then suddenly you do not have to report more. So that's kind of the timing of that, and I think that's also ambitious, but again it depends on the support for that. And then we have the content proposal. I think what we at least can see is that the Commission is hoping for a fast process. Again, now it's up for the Council and the European Parliament to come up with their positions and then negotiate. It's very different how fast this can be done. We have some colleagues that have tried to negotiate in a few months, and I think usually you say it can take up to 4 months, maybe a half a year's time. So that's then the negotiating part. Then, of course, the proposal also needs to be adopted and formally published in the official journal of the EU. And then when that is done, then we have the national process where we in Denmark need to also implement the proposal to Danish law, and that also takes some time. So I think it will take some time in Denmark. We, as a starting point for Danish business, we have 2 times a year where law is implemented to make sure that you know when you need to orient yourself. And we have one 1st of July, I think it is, and the 1st of January. So the Danish implementation process or the Danish regulatory process needs to be ready for then that to be implemented. So again, with a disclaimer, January next year, maybe, but it's just super difficult to say because it really depends on what now happens in the institutions and the support for these changes that are in the proposals.
Yeah, exactly. So it's super important to underline, to stress, it's only proposals and it can be amended. Everything can be changed in these proposals. So this is like a normal risk steering in a company. You will have to, now you have the information, you know what's out here, and then each company will need to navigate here. Do we actually sort of dare to wait and see what is happening, or do we need to start now? It's something to be discussed and to be decided internally, because it's not possible to determine when exactly it will be adopted.
Exactly, and we will follow the developments really closely to be able to communicate with you. And I think this is then a time where everyone just needs to stay updated and follow the developments in order to get that understanding on a continuous basis.
Yeah, exactly. Then there are a number of questions with regards to the VSME standard. So the questions are they mandatory? Do we need to, what does it mean? Can we then, what can we ask our suppliers about and so on? Can you elaborate a little bit on that, Ida?
I can say a few things, and then I think maybe this is also something we can, we will make sure to dive into for our next webinar so that we can be really qualified to answer. But I think for now, again, goes back to what Karina says. The Commission wants to make this standard, voluntary SME standard, and what we only have now is at least a proposal for EFRAG. But as Karina said, when the Commission needs to propose things themselves, wording can change. So again, we have something now on the table, but that doesn't necessarily mean that it will be the final standard. And at least as I understand it, and Karina, you can supplement, but it will be, it's what they try to do is that they try to actually look after some of these companies that can be in the value chain, and they therefore make a cap of what you can kind of require. So it will be something that where you can say companies in scope are then allowed to go out and ask for these things, but at least it should be proportionate. So it should be that you go out and you seek information or data that is within this standard. So it's not necessarily something that, of course, as we talked about, you always go out and ask for information in your value chain, but it's a way to try to be a bit more proportionate.
Yeah, and some of you have asked whether you are then whether you have to report on Scope 3 emissions, and the answer is yes, you will still, because CSRD and the ESRSs are still what we have, and they are still in force. So there are just sort of limits. What the Commission is trying to do is to limit which suppliers you actually reach out to. But of course, that's a balance, and you are always, as a buyer, you're always allowed to ask your suppliers about important information. So yes, time is running. I think we'll actually have to stop now. We have received a nice number of questions, and the good thing about this is that we have another webinar, and that's already on Thursday next week, so the 13th of March. Many of these questions that we have received are related to the Omnibus package, and that is exactly what we'll be focusing on next week. So please sign up for that webinar, and then we'll be happy to continue and answering questions, the answers that we have, because of course it's new regulation. There are still a lot of uncertainties. And then what you also see on the screen is that we have a number of other webinars. So please sign up, and we're looking very much forward to seeing you again. Thank you very much, Maurits, for joining us. And thanks a lot for all of you for listening, spending your time on listening to us. Thanks. And asking questions. Thanks.